I think that Fever Tree has been built as a product to almost, or a business to be sold. I can't see Fever Tree succeeding as an independent business for 10 more years. I think there will be some form of acquisition, and perhaps the fox is in the hen house with Molson Coors coming in. There has already been a suggestion that Molson Coors perhaps could be a longer term buyer. As soon as something like that has occurred, I think other buyers will be on the lookout. If you look at historic share price, they're still relatively cheap for somebody to come along and buy them.
The worst day on Wall Street since the crash of
The
1987.
Dow traders are standing there watching in amazement, and I don't blame them.
Could anyone do the same thing you did starting today?
Are you born with it? Is it DNA? Is it some early childhood exposure?
The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are.
To give up what you're doing well because of guesses about what's going to happen just doesn't make any sense to us. I mean, we are going to be buyers of things over time.
What I needed to get ahead was to compete against idiots. And luckily, there's a large supply.
Welcome back, everybody, to a brand new episode. Today I'm with Sunny, the author of Secret Sauce Investing, and we decided to collaborate on something new. We're just trying out a new format, and in this specific episode we're talking about a company he knows pretty well. It's called Fever Tree, and we'll dive into all the fundamentals, why he likes it, and what we can learn from this company. But before we start, perhaps it would be best to introduce yourself real quick. Why Fever Tree, and just some thoughts.
Yeah, so thanks very much for having me back on again. So with Fever Tree, it's a tonic producer based here in the UK. It's a company I've watched quite closely for almost a decade now. The reason being that outside of investing and outside of Secret Sauce, I work in the drinks industry. So because of that, I've written 2 articles on Fever Tree, and it's a company that I'm invested in.
And what do you like to do from day to day? Some of your hobbies, maybe?
So as we talked about there, I just cycled back to the house. So it's the sun is shining in Scotland. This is very rare. Outside of that, I am very fit, or I try and be very fit where possible, and I like to keep up with my reading as well. I'm just reading Sam Walton's book, Made in America.
Yeah, it's a good book. I read part of it. I didn't finish it yet, but it's a good story, right?
Yeah, it's good. So I've set myself the target of reading 50 books for the year, but when you're writing and doing everything else, this is not always easy. So some fiction in there as well. I just finished Ender's Game as well, which was good.
What number are you on?
I'll need to check my Goodreads. I think I'm on about 16 or 17 now for the year, though.
Wow, well done. 5 months. That's pretty impressive.
Probably just not learning anything. Just not taking anything in, though.
You've been investing for some time already, writing about companies since 2021. Can you describe what kind of investor you are? What characteristics do you look for in companies?
So typically, I maybe quite generically look for what you might call the Charlie Munger approach to companies, or stock picking. So these are companies that typically have high ROIC, they have good growth rates, they typically have high gross margins, they have quite an obvious moat. And beyond that, I do like when these companies don't tend to have debt. They're probably relatively easy to understand as well, and in a segment or a sector that I'm familiar with.
Yeah, that makes sense. Many of us, it sounds pretty familiar and pretty in line with what we're looking for as well, among a few other things, of course. So how did you come across Fever Tree? It's a brand I never heard of before talking to you. And I believe you own the company, so perhaps you could also expand a bit on why you own the company.
So as I explained earlier, I work in the drinks trade in the UK, and Fever Tree was one of these companies that almost just overnight exploded throughout the UK. I'm not sure if it was the same in the Netherlands, but we had the gin boom in the UK, where it felt like there was several new distilleries popping up every week. And Fever Tree was really the company that benefited off the back of this. So from about 2010 right up until COVID time, there just seemed to be this abundance of gin distilleries especially, and Fever Tree's growth came off the back of that. So Fever Tree was a company that I have been aware of, I've bought from in the past, bought stock from. they were very much a FTSE darling. So if you look back on the share price of Fever Tree, at one point they were close to about £40 a share, and it just seemed, if you look at FinTwit, they were talked about, especially in the UK. From my perspective, I was very aware that they were a good company. They had a solid growth rate, high margins, strong brand. However, the share price never aligned with where I wanted to invest. That wasn't until about 2022 where I got my first opportunity to buy in, and then again I've purchased some more shares in 2024 when there was a bit more of a pullback.
Okay, and perhaps that is a good segment to go over what Fever Tree is and does. Is Fever Tree the brand itself also, or is it like the company name that sells different kinds of brands, just to start it off?
Yeah, that's a great question, because we're probably so familiar with people like Coca-Cola or Pepsi, who are the brand, but then also have different product segments. But Fever Tree is the company name and the brand name. There are not any sub-brands underneath Fever Tree.
And can you expand a bit and give us some background on how Fever Tree got started and how it evolved into what it is today?
So Fever Tree was founded, I think it's just had its 20-year anniversary, so 2005, by Charles Rawls and Tim Warlow. And it's what I would describe as a quintessentially British brand, so it tends to sell well around the world because it has that association with quality. As I mentioned already, they did very well with the gin boom from sort of 2010 onwards. But since then, they've expanded outside of tonic, so they've diversified their product base. So they now have tonics, other sort of adult soft drinks, which includes the likes of lemonade, ginger beer, cola. They've introduced premium sodas and cocktail mixers, which include the likes of margaritas, mojitos, espresso martini. And then they've also got RTDs as well. So that's variations on cocktails and cans. And beyond that, they're really expanding quite heavily into the US, which I'm sure we'll come on to.
Yeah, before we dug into this analysis, I looked at the investor relations side. I read some different reports on the company, and it feels like the business is pretty simple to understand. Perhaps you could explain to our listeners and to me, what do they do in simple terms, and how do they make money?
So they essentially just sell tonics and soft drinks. The majority of their products are non-alcoholic, and they started here in the UK, and they're now expanding that to the rest of the world. So I've recognized you've said that you haven't seen any in the Netherlands, so you maybe need to keep an eye out, but it's quite popular. It's the most popular tonic brand, especially here in the UK, and they seem to be the number one tonic brand and ginger beer brand in the US by value. So they're certainly capturing market share. I can see it sold in most supermarkets here in the UK, whether that be Tesco or Asda, and then I'm also aware it's sold now in the US in Walmart.
Is it a global brand, or is it still expanding, or is it available everywhere?
It is available everywhere, but obviously the fact that you have never heard of it before demonstrates that perhaps they're not as big as a shareholder as I would like them to be. Yes, they're very much based in the US outside of the UK, and they're expanding into Europe and Australasia as well. But the company has obviously been UK centric for a long time. However, the US has just recently overtaken the UK as their largest market.
Yeah, perhaps I'm not the biggest benchmark in the Netherlands. I don't really like tonics anyway, so I'm not really looking out for the brand anyway. So perhaps my girlfriend heard of it before, but I haven't. So, I mean, that's the thing. Do you drink Fever Tree, or is it more of a, I don't know, female drink, or does anyone drink Fever Tree?
Yeah, as I said, it's very popular here in the UK. It tends to be a more of a premium tonic, so people may pay a little bit more for Fever Tree versus the likes of Schweppes or Britvic. You'll find that most Fever Tree, apart from the cans, all tend to come in glass bottles, which again lends itself to the premium side of the product. For me, Fever Tree falls into a bit of a category where we now have the likes of Heinz tomato sauce or the baked beans, where you have this flavour that you associate with a product. And if I was to drink a gin and tonic, perhaps partly because I'm a shareholder, but also because of the fact that I like a quality gin and tonic, I would have to have it with Fever Tree. I think there's anecdotal examples where I've been served gins and tonics without Fever Tree and quite honestly not able to drink it.
Fair enough. Yeah, it's a bit anecdotal, but that works. I'd like to ask another question on the business model side of Fever Tree. Fever Tree has positioned itself as a premium brand with an asset-light business model. After nearly 2 decades, the business still remains relatively small, operating in a category that some might argue is structurally limited, I guess. You've said that you like the brand itself, but I'm curious, when you step back and look at the full picture, what do you see as Fever Tree's biggest enduring strength in its business model? And perhaps on the flip side, what's the weakness in their business model, rather?
So if we break that down into a few parts, what's its most underappreciated strength is, first and foremost, in my view anyway, Fever Tree has largely driven or almost created a new category of mixer that didn't exist prior to Fever Tree launching. They obviously evidence this in a lot of their investor reports, but they estimate that since 2014 through to 2023, the mixer market has grown by about 82%. So we've also seen a lot of growth in the spirits segment, and that's we've now seen spirits surpass beer as a product. So typically in the alcohol market, spirits make up about 42.2%, whilst beer holds about 41.9%. So over the last decade, we've seen this quite significant shift away from beer consumption to spirits, and Fever Tree has rode that wave. In regards to the brand itself as well, I think, to your point earlier, obviously you've still got some work to do, but there's a real strength of brand and brand association that if you're in a beer garden or wherever it may be, especially in the UK, Fever Tree tends to be advertised. It's one of these companies that it's associated with quality. So for me, I think Fever Tree, if they can continue to scale, and they are still scaling, I think if we look at the US and we look at the numbers, they're absolutely slowing down here in the UK and Europe. I think there was a slight decrease actually in the most recent financial year, but for the US and for the rest of the world, the sales are still growing.
What you mentioned about the beer is also very interesting, and I do think that the younger generation is moving away from alcohol, whether people like it or not. I think it's probably better for society long term, especially when you look at health-related issues. So perhaps you can expand a bit more on what the market actually looks like right now. Is it still growing? Who are their main competitors maybe? And what are some of the KPIs maybe in this industry?
Yeah, so if we look at the market and maybe even to one of your earlier points, Fever Tree sort of financial year 2024, they generated about 360 million or just over that, which obviously they've been going for 20 years, which may not, they perhaps, to your point earlier, there should be a larger company, but they are still growing as a business. Sales have slowed down, but they're seeing growth in the US, where there was about a 9% growth, and the rest of the world, they grew about 19%. So they're growing in categories outside of tonic as well. They are now typically, especially by value, the largest tonic brand in the US. However, what we're seeing is they're diversifying their product range, and even to your point there about the younger generation not consuming alcohol, perhaps it's not as much of a disadvantage to Fever Tree that has been very much a mixer with spirits, that in fact does it open a door and it's still an unknown to become an alternative to the spirits and to younger consumption, so that people can still drink with their friends, but they're drinking Fever Tree, which is non-alcoholic. So if we consider the market in general, again, I'll hit back on the point that Fever Tree have essentially redefined this category and grown the category. Tonic, give me some input here, but tonic seems to very much have been a gin and tonic. It was very quintessentially British. So I think if we look at their main competitors, from my side of things, it was very much Britvic and Schweppes. So Schweppes of what was historically Cadbury Schweppes. It has a lot of history here in the UK, but perhaps had just fallen away from being a premium brand or any association. So the real interesting elements of the competitors is the fact that neither of these is owned by Coca-Cola or Pepsi. I just assumed that one or two of them would be, based on their product portfolio. But if you consider the likes of Schweppes, I'll just break it down here. But Schweppes, in terms of ownership, is not just a single company. It's a company that's quite fragmented. So it's one of these companies that, again, part of it's owned by Dr. Pepper in the US. We've then got it trademarked with Coca-Cola owning Schweppes in, I think it's 21 European countries. And then in a further 22 European countries, it's owned by Beam Suntory. So as a market and a product, it's very, very fractured. And this was the main competitor in the marketplace. If we then consider Britvic, Britvic were publicly traded for quite a long time, but they've actually just recently been acquired by Carlsberg, and that might offer them more distribution. But again, the products, in my opinion, are not on par with Fever-Tree.
Would you say Fever-Tree is more focused on health-conscious consumers?
I wouldn't say they're perhaps focusing on health, but I think it just naturally offers itself to that marketplace because, as if you take sort of data based on the health of society, those who are more affluent tend to have better health, and I think Fever-Tree is targeting those consumers. We see that with even the partnership where they had, I think it was with Queen's, the tennis club, and it's sponsoring sports events. And with that, there's a certain individual or target consumer they're going after. So I'm not necessarily saying it's a health product or a health or a even an alternative to spirits, but it certainly is the case that I think it targets a more affluent and naturally healthy consumer.
That makes sense. And this market has clearly benefited from the rise of premium spirits and the broader shift towards at-home consumption, especially post-COVID. But some would argue that the category itself is still relatively niche, with pretty limited a TAM, total addressable market, once you strip out tonic and gin, maybe. It feels like I don't know, maybe a mature market, some would say. So do you know, when we talk about this growth in this market, do you think how much of is it organic? Is it category-wide expansion versus Fever-Tree just simply gaining market share in a very stagnant or slow-growing space? Or is the market just growing as a whole and is Fever-Tree benefiting from that?
So if we reflect on the last decade, and with Fever-Tree's metrics, as I've already quoted, they grew the market, or the mixer market in the UK, by about 82%, or the market grew by 82%, sorry, with Fever-Tree capturing about almost 50% of that marketplace. However, with Fever-Tree, I would be skeptical that they could achieve the same growth for the rest of the world, including the US, at that level. That's in the UK. I was part of it and witnessed it firsthand. We saw there was this huge resurgence in gin and craft distilleries. Now, that's not to say that can't continue, but I think that momentum has fallen off after COVID. And I think if we consider the US as the next big opportunity for Fever-Tree, there's two things to consider here. First of all, Fever-Tree considers the US US alcohol consumption market to be about 4 times the size of the UK. So if you consider that, there's still probably anywhere from, they could probably do about 4 times in sales what they're already doing in the US over the next decade or so. And second of all, they've obviously just announced the partnership with Molson Coors, and that in itself offers them quite considerable distribution opportunities. Obviously, there's a element here where the brand could potentially be diluted as they grow because they're obviously pushing towards a premium element. But they're diversifying the product base, which should support places like the UK and Europe where they're perhaps losing sales. And then with the US, that will only support the growth as they break into that market. But it's not to say that the US will have the same demand and pull through for gin and tonics that we've had here in the UK for the last decade.
I was about to ask you on Molson Coors. I think Molson Coors, is that how I pronounce it?
Yeah, I think that's right.
I think they're mostly known for their beers, right?
Yeah, that's correct. Yeah, that's absolutely spot on. So they are, but they're very much a distribution company. So if you look at the most recent, or one of the most recent investor relations from Fever-Tree, they do take into account the fact that Molson Coors are very, they're making 400 independent, or they've got 400 independent distributors. They're servicing about 500,000 accounts, and on a daily basis, they're making 30,000 deliveries. So there's an option for Fever-Tree to tap into that. But as I say, and as you've rightly pointed out, Molson Coors is still a beer brand or a beer distribution company, but that's perhaps not too dissimilar from somebody like a Diageo here in the UK. Somebody gets a portfolio of products offered to them, and tonic is just an add-on to Molson Coors' portfolio.
Yeah, I believe they bought a stake of around 8 or 9%, and as part of the deal, they now handle everything for Fever-Tree in the United States, from making the drinks and selling and marketing them. What do you think of this move? Is it overall a good move for Fever-Tree, since you're a shareholder of Fever-Tree, or do you think, what's your gut feeling on this move?
Yep. So the Molson Coors relationship, in January this year, they announced they were purchasing an 8.5% stake in Fever-Tree for 71 million. So this made them the second largest shareholder in the company. They have guaranteed a certain level of profit for Fever-Tree for the coming years, which I thought was an interesting one, and this will be classed almost as a royalty, but then sort of baked back into the revenue and margin. But this was just, I think, for Fever-Tree between 2026 and 2030. It just meant they were guaranteed a certain level of profits, regardless of obviously how well they sell in the US. So Molson Coors are obviously incentivized to drive sales of Fever-Tree if they've opted to guarantee a certain level of profits. I think if we can just consider that to break into a new market, particularly one as large as the US, there's a large cost associated with that. There's hiring of teams, there's perhaps infrastructure and operations you need in place. So I have no doubt that Fever-Tree probably had a good distributor, but they have a distributor with an incentive to obviously distribute their product in Molson Coors. My take on this is largely positive. I did see mixed feedback from shareholders when this was announced, and I think there's obviously the risk as well that this move dilutes brand equity. Molson Coors is not typically a premium product. However, we'll just have to see how it plays out over the next number of years. And if, as a positive, that 71 million was, I think it was issued in new shares, but it looks like Fever-Tree have announced they'll commence a share buyback program for that 71 million, so that shareholders are ultimately not being diluted in the long term.
Yeah, whether that's the best way of allocating capital is to be determined. It depends on the valuation, I suppose. But that's a different story. Perhaps it's a good time to look at the competitive advantage of Fever-Tree, if they have any to begin with. What do you think is Fever-Tree's biggest advantage or moat?
So I think first and foremost, it has to be the brand. That is the largest element of Fever-Tree. That it's something that, first and foremost, they're perhaps not there yet, obviously, in terms of size. But if you look at something like Coca-Cola, you know what you're going to receive wherever you're around the world. You understand exactly what the flavour of that product is going to be as soon as you drink it. So in terms of Fever-Tree, I think first and foremost it's the brand. It's the brand that ensures the product remains premium, and with that, it means consumers are willing to pay a bit more. Beyond that, I think there's an operational side of things. So they're an asset-light business. I don't know maybe how much of a moat it offers them, but it certainly offers a competitive advantage where the majority of Fever-Tree, you would think they'd have, as a company, considerable high capex, but in fact, if you look at the capex, it's relatively low. I can't remember off the top of my head here, but I think we're sort of single-digit percentages of revenue. And beyond that, we've obviously not touched on the founders and the shareholders, but they are still remain owner-operated as a business. So Tim Worrell, who's the CEO, he was still one of the original founders 20 years ago. So it's still owner-operated, and I think he's only around 50, so he does still have quite a lot of runway left for this company.
So how strong is Fever Tree's brand compared to, say, Coca-Cola? And can any other company replicate it easily?
So I think it's maybe not totally fair to compare, say, Fever Tree with Coca-Cola, because Coca-Cola is perhaps one of the most famous brands in history. But if it comes to tonics, then I think Fever Tree, especially here in the UK, is one of the undisputed leaders in the category. I think we've got evidence there to say that drinks are international. They voted it the number one selling mixer for 11 years running. And we've seen that's bartenders who are voting for that. So ultimately, within the spirits and drinks industry, a lot of the time it's the bartenders who are the gatekeepers. So if bartenders for over a decade have voted it the number one tonic and mixer, then they're still delivering, whether that be on the product quality side or in the brand. But to go back to your question on Coca-Cola, have they got the strength of brand? Definitely not. But I think that's something they will obviously look to expand upon, especially with the Molson Coors relationship when it comes to the US.
I think you had some good points. I'd just like to add something here. First, about the asset light advantage. Yes, it's an advantage. It's efficient, but it also means they outsource production, which does lower control over quality, and it limits scale advantages, if you ask me, especially globally. And secondly, on the brand, yes, Fever Tree might be a premium name in mixers, but I wonder if the brand strength is enough to keep pricing power if cheaper, as equally premium feeling alternatives show up. And I believe you had the Heinz analogy in the beginning, and it makes sense, and I think it holds up. But mixers are consumed differently, I think. No one is really loyal to tonic water the way that they are to ketchup, maybe. At least that's just my gut feeling.
Yeah, I would disagree when it comes to the tonic water side of things. I think consumers tend to, remain loyal to certain products, whether that be Coca-Cola, Heinz, or tonics. I would not be concerned that Fever Tree does not have brand loyalty. If anything, I think it would be the shift in product category. I think if you capture a gin and tonic drinker, then it's going to be the case that they're a Fever Tree drinker for life. That being said, unless another premium brand of that quality sort of muscles in, which that has not over the last decade happened. We've seen efforts by Coca-Cola to relaunch premium glass mixers. I don't actually think they're still sold. We've seen attempts by Schweppes to take on Fever Tree, even if you look at the companies who are very good at replicating products like Lidl and Aldi. They've tried to create their own, but Fever Tree still has that brand pull through. However, I think probably the big risk for Fever Tree outside of that is shifting consumer demand due to new products. I think customers, perhaps, yes, we've seen growth in the spirits market, but we've also started to see there's been challenges for the likes of Diageo recently, and if customers stop drinking gin and tonic, then suddenly Fever Tree is no longer essential or required.
We can agree to disagree here, I suppose. We don't have to agree on everything. I think it would be a good time to talk about the financials a little bit. I just want to reiterate that following financials is very difficult in audio format, so perhaps we can keep this short and sweet. What do investors really need to know about Fever Tree's financials? And yeah, perhaps you could share some highlights.
So for me, I think the top line is the fact that revenue growth has slowed significantly in comparison to pre-COVID levels. As a group, they generated in financial year 2024 368 million. For the margin, or the gross margin, this came in at 37.5%, which I think it's worth drawing attention to here, because especially during COVID, when there was obviously shipping shock and challenges with inflation, that gross margin was really eaten into. Pre-COVID, the gross margin was close to 50%, and we're starting to see a trajectory where margin is starting to recover. However, if we reflect back on the revenue side of things, we recognise that revenue is slowing, particularly in the UK and Europe. In fact, it's decreasing slightly here. However, in the US, we're still seeing growth in the rest of the world. So it's quite imperative that Fevertree in the coming year or two certainly has to accelerate that growth, and hopefully that growth will come with the Molson Coors partnership.
And what do you think of the Fevertree capital allocation?
So from my side, I think the ROIC, for example, sits at about 11%. I think to your earlier point, is there challenges around capital allocation, and can their capex spend, for example, be challenged? Absolutely. However, I think Fevertree has largely been an asset-light business, and this has meant that they've not had to take on debt. They don't have to service debt with capital, and there's a lot of equity then has been built up for the shareholder. So if we reflect on the fact they're obviously in the coming years are buying back quite a considerable amount of shares, there probably remains a question mark around a company whose revenue is only about 365 or 368 million, as to should they be buying back such considerably high numbers of shares, or should they be investing more aggressively in growth?
And what KPIs do you track personally for the company?
So I will track the revenue growth, which I think is quite important, the revenue growth per geographic area, and also the gross margin. I think all of these things are quite important. And with Fevertree, well, again, if you reflect back from sort of 2018 into 2020, where there was obviously a decrease because obviously the bars and clubs were closed, we're starting to see revenue flatten out. So for me, as a shareholder, I would like to see that growth overall, or that revenue growth, sorry, return to double digits.
Yeah, definitely. Anything else on the financials you'd like to share?
No, I think we're good.
Well, let's see who is running the ship. What can you tell us about the management team of Fevertree? And perhaps to combine it with another question, does the management have enough skin in the game?
So Tim Worrell is one of the co-founders of the business, and he's currently the CEO. He launched the brand alongside his co-founder, Charles Rolfs, 20 years ago. He still retains just over a 4.5% ownership stake. Now, for me, this is something of a red flag. Both founders have sold about 80 million of shares back in 2017, when the shares were trading at around £27. So he's since been given incentives and share options, but it's still a relatively small single figure percentage that he owns in comparison to what he did originally own. Now, you can't perhaps take away from a founder if he wants to take some equity off the table and ensure there's obviously that safety, but it just seems like he's taking quite a considerable amount out of the business. But if we even reflect on our previous conversation about Games Workshop, we were dealing with Kevin Roundtree, who had little to no shares in the business and still ran it excellently. So perhaps 4.5% of a business is better than nothing.
Yeah, it's funny looking back, selling at £27 a share, and then the share price declined 70% until today, which is pretty crazy if you think about it. He must have known something, right?
Perhaps. Fevertree certainly was a darling of the FTSE AIM index. As I say, it was followed and touted for many years. Whether this, I always love the headlines after Fevertree announce earnings, because there's always a pun on going flat or popping to some extent. So I wonder if they get more coverage purely just because the headlines can make a pun of them.
Yeah. I do agree that there's still plenty of runway left for them to grow. So maybe he just knew that the price was a bit excessive at that point, and just, it doesn't necessarily mean that he thinks his company is worthless, but perhaps a $10 billion market cap was just too big at that time.
What really surprises me about the price of Fever Tree and where we've seen the share price revert to in recent years is that if you consider the likes of Diageo and even Coca-Cola, the fact that Fever Tree just last year and earlier was traded at around or had a market cap of about £1 billion. I think Diageo paid around $1 billion for Casamigos, the tequila brand, and this was a brand that didn't have a lot of traction or proven credibility. Whereas for me, Fever Tree would have been the perfect plug-in to someone like Diageo's portfolio for $1 billion or just over £1 billion.
Yeah, maybe. Yeah. Interesting to think about. What's also interesting to think about are the risks and opportunities for a company like Fever Tree. What do you think are the biggest risks to Fever's long-term success?
I think first and foremost, one of the biggest risks is obviously the addition of a product from Coca-Cola or Pepsi that can compete successfully with Fever Tree. We've not seen that yet, but that's not to say that can't come to fruition or can't come out in the near term. Especially when, to your point, that the revenue of the overall company is actually still relatively small if you compare it to somebody like Coca-Cola and the distribution and reach that a company like that has. There's obviously an alignment of premium spirits, which has driven growth within the category for a number of years. But as the macro environment becomes a bit more challenging and perhaps people spend less on premium products and luxury goods, then Fever Tree may also be affected. In addition, I think there's the risk that we've seen younger, or the generation, or Gen Z, obviously has started to consume less alcohol. So perhaps Fever Tree can get around this by offering an alcohol-free alternative, but I don't think that's by any means guaranteed. And then lastly, I think, yes, on paper, the Molson Coors relationship looks positive, but as we've already touched on, there's perhaps the risk that in the long term, it devalues the brand, or something goes wrong within the US and they can't then recover that market share.
And to flip the script a bit, what are the biggest opportunities for Fever Tree then?
We've seen the success that Fever Tree has had within the UK. They've dominated the market, and there's absolutely no doubt that they're finding success with a diversified product base, particularly in the ginger beer category and outside of the tonic category. So the opportunities are certainly within the US and the rest of the world. If they can maintain their market share in the UK or in Europe, there's opportunity. But really, within the US, I think we have to keep an eye out for that growth of 4x. If they can achieve that within the, say, next decade or 20 years, then they should basically be on track. But I think outside of that, if there's a stagnation of growth in the US or any challenges, I think that could be a red flag.
Yeah, definitely. Yeah. So what do you think of the valuation of Fever Tree? We just mentioned that the share price is around £1 billion at this time. At first glance, I think the price to earnings ratio is pretty high, but that could be due to depressed earnings. So what do you think of the current valuation?
So for me, as we've already talked about, Fever Tree for so long was at such a high valuation that there never seemed to be an opportunity to invest successfully. However, I've now had the opportunity to invest in Fever Tree on occasions where it's around £6 to £6.50. Fortunately, there's been a little bit of growth since that point. If we consider the price to sales ratio, I think it sits at around 2.7 just now, which historically is very low. And it's not fair to sort of say, well, just because it's at a low historically, it's a good valuation. But it's worth pointing out that fundamentally, on most metrics, Fever Tree is at a near low point, or has been, if we sort of just consider early 2025. On a DCF basis as well, I think I have it working out about £12.50, which for me there's still a little bit of margin there. I think you're about a third off a discount, whereas if you're buying in it at about £6.50, you're obviously being offered about a 50% discount.
Just a little question to think about. Imagine if Coca-Cola steps in tomorrow and just buys Fever Tree outright. What would you do if they did that? Would you sell? If the price they paid is high enough, would you hold and see where it takes you, or what would you do?
I think that Fever-Tree has been built as a product to almost, or a business to be sold. I can't see Fever-Tree succeeding as an independent business for 10 more years. I think there will be some form of acquisition, and perhaps the fox is in the hen house with Molson Coors coming in. There has already been a suggestion that Molson Coors perhaps could be a longer term buyer. I think the article then quoted that there was cold water poured on this suggestion. But as soon as something like that has occurred, I think other buyers will be on the lookout. If anything, I'm just surprised it hasn't happened more recently. I thought that perhaps they would have been acquired at about £1 billion of market cap. So if you look at historic share price, they're still relatively cheap for somebody to come along and buy them.
Okay, that's very interesting. I wouldn't have expected you to say that. So if you had to pitch Fever-Tree to someone, what is so interesting about this business? And perhaps you can give your bullish thesis on Fever-Tree in, say, a minute.
So I would say it's a premium product with a premium brand. I think those two, once somebody tries Fever-Tree or begins to drink Fever-Tree, they won't then move away from it. I don't think you can go back to a cheaper or lower quality tonic or mixer once you have tried Fever-Tree. The bull case, especially here in the UK, is diversification. They've taken their brand and they've diversified into cocktail mixers and other adult soft drinks. Perhaps the upside as well could be the fact that there's opportunity within the US. We're optimistic we'll see increase in revenue driven by the distribution of Molson Coors, and there's also going to be opportunity within the rest of the world as we're seeing growth there as well. We need to be considerate of other markets. There's been success in Australasia, where Fever-Tree perhaps will find it more challenging is in Asian markets. And I think we also need to be mindful as well of a point you've rightly pointed out is of Gen Z consuming less alcohol. So we need to be mindful and watch whether Fever-Tree becomes an alternative or in fact it's just discounted along with younger consumers drinking alcohol.
So to follow up on that, what would be like 3 or 4 key reasons to sell Fever-Tree aside from valuation?
I think a deterioration in revenue is an absolute red flag for me. If there was a real pullback in sales, if there was a deterioration in margins would be another point. If there was a considerable amount of debt taken on, and I think again Fever-Tree has appealed to me as a company because it has had next to no debt historically. And then lastly, I think if Tim Worrell stepped down, this would be a cause for concern because yes, perhaps as we've already talked about, he only owns about 4.5% of the business, but he is still it's owner operated, and if he was to step aside, then perhaps we just need to be again mindful of those, that person who took over running Fever-Tree or who took over his business.
Yeah, definitely. So to close off this analysis of Fever-Tree, any closing thoughts on the company?
I would just say that first of all, if you've not tried Fever-Tree as a product or mixer for any consumers, they should go out there and perhaps mix it with a gin or a rum, or just try it with no alcohol. I think this is
Sonny, you're a bit biased.
Yeah. I think this is advice to you as well, because I'd like to see by our next conversation that you have seen Fever-Tree in the Dutch market. And I think is Holland not the home to gin? This is where gin comes from.
I don't know, but I'm definitely going to try it. I have to.
And then you can determine, would you choose to replace it with another tonic, or would you choose to stick with Fever-Tree? So yeah. I think that's one of the key points. I think I'll be curious to see over the coming years if Fever-Tree is acquired or somebody like Molson Coors perhaps buys more shares, and then I would also be interested as a shareholder to see if they can truly achieve growth within the US. That, as we've discussed, if there's opportunity to achieve a sort of 4x on their market share in the US or growth, then if they can truly undertake this, then there's going to be real value delivered for shareholders.
Awesome, Sonny. It's not really my type of company, but it's pretty clear to me that this company has the potential to be acquired or has the potential to grow it for a long time, but perhaps not on its own. So I do think that the acquisition of Molson Coors or the acquisition of a large stake rather, is probably net positive for Fever Tree in the long term. Yeah, I think you did a great job explaining the company to us, to our listeners, to me, and yeah, thank you so much for doing so.
So thank you very much for having me. I'll finish on one final point of anecdotal evidence.
All right.
That do with it as you will. But as somebody who's worked in the alcohol segment for actually over a decade now, Fever Tree has always been, and perhaps this is why I'm biased, Fever Tree's always been the go-to brand. So I won't name any names, but there was a gin event here in the UK. It was a very popular gin event, and they entered administration. And I always remember hearing a customer quote that they knew that company was in trouble when they swapped out Fever Tree for Schweppes. And for me, that summarizes the company and the competition perfectly.
I'll take the anecdotal evidence, and next time we meet up, I'll definitely have to taste, and yeah, I definitely need to try it. And just being curious, do you think you have as perhaps an industry insider, do you think you have an edge with determining whether this company is a good investment, or do you think anyone can really see this?
I think I tend to have some sort of insight now, perhaps that might bias me with Fever Tree, but what I do tend to notice, if you go to any events or anything, particularly in the UK, that tends to promote alcohol, especially gin, you will just find Fever Tree is always the go-to mixer. And if it's not the go-to mixer, people always question this. So for me, that shows strength of the product and strength of the brand.
Yeah, that makes sense. It's hard for me to see and feel the strength, right? Next time we will be recording and talking about a completely different company, the largest luxury holding in the world, or well, used to be largest. I think Hermes surpassed them recently in market cap. Yeah, I'm excited to talk about LVMH next.
I'm very excited. I've started my research, and it's considerably more complicated than Fever Tree as a business. But I think Bernard Arnault has done an incredible job, and he really is the Warren Buffett of the luxury industry.
And on that note, we'll end this analysis. I'm looking forward to talking to you in a few weeks. And thank you so much for doing the research for us. And yeah, thank you so much.
Great. Thanks for having me.